been a lot of anticipatory moves in terms of buying Bitcoin ahead of this. And you'll often get in our business, they'll call the trade a sell on the news. So that you'll get hedge funds and other investors buying into an event that they think will happen. And when it happens, it's just a sell signal for them, just then on to the next thing for them. So we might see a little bit of that, but enough people are talking about that now that maybe it won't be as big a deal as it might have been otherwise.
Since around 2015, Cathie Wood has played a significant role in public fund management, particularly in discussions about Bitcoin. In a recent interview, she was questioned about the potential impact of a spot Bitcoin ETF on institutional adoption in 2024. Wood emphasizes that while a spot Bitcoin ETF doesn't replace self-custody, it is crucial for institutional exposure to Bitcoin. Without SEC approval, institutions might hesitate to seriously consider Bitcoin. Wood contends that an ETF serves as an accessible on-ramp for institutions, presented in a format they understand and trust. Drawing on Ark Invest's research, Wood underscores that institutional involvement is the most significant driver of price appreciation in a new asset class. She believes institutions are starting to recognize Bitcoin as a new asset class, a crucial acknowledgement as new asset classes typically offer low correlation of returns and increased returns per unit of risk. Wood highlights the importance of this recognition for institutions competing against each other, as they cannot afford to overlook a burgeoning asset class like Bitcoin. In addition, Lyn Alden contributes to the conversation, discussing the global rise of various Bitcoin movements and emphasizing the grassroots nature of these movements. She points out the unstoppable bottom-up adoption that inspires more communities to adopt Bitcoin, creating a cascade effect that is difficult to replicate and incredibly powerful, especially for those in need.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I would like to clarify something that, we're seeing on X. Many people think that we think this is a replacement for self-custody. Absolutely not. We are as focused on the importance of decentralization as anyone is out there. But in terms of giving institutions exposure, unless they got the green light from the SEC for the most part, that was critical. They probably wouldn't even think about Bitcoin. And without an ETF, what we would see in institutions would be major gridlock. You'd have all these departments and institutions, procurement for a new service provider, finance, compliance, and legal. You'd have so many touch points that it would be a long time, I think, before institutions would get involved. This gives them an on-ramp that they understand well. It's in an ETF wrapper, which has been a good wrapper for end clients in our business, and it is now becoming the preferred wrapper. So and Yassine can talk about this in much more detail, but based on our research led by Yassine, the institutional, in terms of the price appreciation we expect during the next 7 years through 2030, institutional involvement in a new asset class is the number one, the biggest increment to the price, we believe. And one of the reasons it is becoming more top of mind for institutions is they are buying into this notion that Bitcoin is ringing the bell for a new asset class. We did a paper with Coinbase with that title in 2016. It's truly a new asset class, and institutions cannot dismiss a new asset class. Why? A new asset class typically means low correlation of returns, and it typically means, therefore, increased returns per unit of risk. And so these institutions cannot ignore it. They're competing against one another. And that is why I think it's going to be a very big deal for this new asset class. Of course, for a time there, the leadership at BlackRock was not so favorably disposed to Bitcoin. So that was very big, just that. And I think that happened, Yassine, was that 9 months ago, something like that? Might have been longer, more than a year ago, perhaps. So that got the brain cells going in the institutional world. And another thing did as well, and it was before BlackRock, Cambridge Associates, which is a consultant primarily to institutions, I think endowments, foundations, and pension funds, in 2018 wrote a paper and said, okay, asset allocators, you may not be predisposed to liking this thing called Bitcoin, but you better study it and develop a stronger point of view, because it does appear to be a new asset class. So since 2000, that's 5 years now, we've had that kind of thought roaming around, and the excuse was, oh, the SEC hasn't blessed it. Now they'll have no excuse. And if you just talk about 1% of trillions and trillions of dollars, or 1% allocation, well, the scarcity value of Bitcoin will shine through next year if institutions do indeed decide they must gain access to this new asset class.
Lyn Alden underscores the emergence of small Bitcoin communities worldwide. She highlights the importance of grassroots adoption in locations like Bitcoin Beach, Bitcoin Jungle in Costa Rica, Bitcoin Easy in South Africa, and Bitcoin Lake in Guatemala. Alden emphasizes that while the spotlight often focuses on large-scale developments like ETFs or nation-state adoption, the true transformative power of Bitcoin lies in its capacity to empower small communities and individuals, particularly in regions facing challenges such as multiple currencies, capital controls, and conversion frictions. As we return to the video, Lyn Alden expresses her anticipation for the future of Bitcoin as an asset class. She delves into what she looks forward to regarding Bitcoin's trajectory. According to Alden, while ETFs may be notable, the real allure lies in the vibrancy and significance of Bitcoin communities, which she deems as way cooler than ETFs.
People are focused on things like ETFs or nation-state adoption. I like small community adoption. And so Bitcoin Beach was an early one, and that inspired a nation. And that was kind of a special case. But now you see, for example, there's Bitcoin Jungle in Costa Rica. There's Bitcoin Cathie in South Africa. There's Bitcoin Lake in Guatemala. There's the Indonesia Bitcoin Conference hosted by a woman named Dia. There's now for 2 years running. And then there's the Africa Bitcoin Conference in Ghana hosted by a woman named Farida. And so when you see in the developed world these kind of questions like, what is Bitcoin's use case, or it's a solution in search of a problem, it's like, well, broaden your scope and look around the world. If you look at Africa, for example, there's over 40 currencies, and they all have like these capital controls wrapped around them. They all have conversion frictions between them. They have fake exchange rates between them. If I send dollars to someone for doing graphic design work for me in Nigeria, unless they have a dollar bank account, they're probably not going to receive it in dollars. If they do, it's going to be at a fake exchange rate. It's like there's all these conversions that happen that are all frictions. They're all permissioned. They're all basically siphoning off the top. And the cool thing about Bitcoin is that you just go around borders. So if I was working with a graphic designer anywhere in the world and they hold up a QR code or have a Nostr address, I can just pay them on the internet. It goes around their little locked up local capital market, their local banking system, and it can get to them. And so, historically, we have 160 currencies in the world. There's two main ways the capital goes in and out. One is ports of entry, which are obviously very physically controlled. And the other one is wire transfers. And those banks are highly controlled. And they almost have like a blood-brain barrier between, like, if you send dollars, it just gets converted if they want it to into the local currency. It's very controlled. And so what Bitcoin does, and to some extent stablecoins do, is they just break that open. They just say, okay, you just route around all of that. You can bring infinite value density through an airport. You can send infinite value density in near infinite speed over the internet. and just go around that and empower the people in those places. And so those little hubs that are building up organically, and as some build up, another one sees them build, and they say, well, why doesn't our country have that? So they build the next round, and that's why there's over the past 3, 4, 5 years, there's been this kind of cascade of more and more of these little Bitcoin hubs. Even in the United States, Bitcoin Commons, Bitcoin Park. These are U.S. hubs, and so both in the U.S. Now there's Real Bedford in UK, right? That's like another little Bitcoin hub. So they're either centered around a city. In New York, there's PubKey, right? So these little kind of persistent meetups, or these real estate, or these kind of networks that are building these hubs. And then I especially love the ones that are foreign, because if anything, that's the environment that needs it even more. And so I think that's one of the most unstoppable aspects of it, and that's also one of the most inspiring.
Bitcoin has regained positive momentum following a tumultuous start to the year, recovering from losses incurred during a recent flash crash. Investors are brushing off concerns about U.S. regulators potentially not authorizing exchange-traded funds to directly hold the digital asset. The cryptocurrency, which experienced a significant intraday drop of 99.2% 2 days ago, the most since November 2022, rebounded as sentiment improved. Matrix Port analyst Marcus Thielen's note predicting the Securities and Exchange Commission's rejection of all Bitcoin ETF proposals this month initially contributed to the downward spiral. Bloomberg intelligence analysts estimate a 90% probability of SEC approval for the ETFs by January 10th. It appears that spot Bitcoin ETFs in the US are poised for launch, with amended filings submitted by major players like BlackRock, Grayscale, and Fidelity, anticipating SEC approval in the coming days. More than a dozen applicants seek to introduce the first spot Bitcoin ETFs in the US, and multiple issuers could potentially receive simultaneous approvals. The final deadline for SEC action on at least one application by Ark 21 shares is January 10th, suggesting the regulator may approve all applications it is comfortable with by that date. The ongoing developments prompt speculation about potential scenarios, inviting discussions in the comments section on the various outcomes as the ETF approval deadline approaches. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.